Hello from Trend Signal for a review of the data and events, the week beginning the 10th of August. This morning, on Monday morning, equities were up initially following publication of the US employment report the previous Friday, but have slipped quite sharply with the FTSE probably the weakest of major indices as the resource sector undermines the FTSE. Certainly looking at the Financial Times, you can see a lot of the key miners significantly lower there, and all to do with concerns over the Chinese data that's recently been released that suggests that the world's largest economy continues to struggle. Friday, bonds rallied sharply after the non-farm payroll report. There's a bit of profit taking on Monday morning. The euro-dollar rate that rallied a cent as the euro recovered a little bit versus the dollar as traders adjusted their positions. But really, I think the data suggests that the Fed have more evidence now to support the first rate rise since the latter part of 2008. The market reaction's been a little bit mixed, really, which sort of is a part reflection on the summer doldrums, it being August at the moment. And probably suggests that most traders are now positioned for a rate rise. Last week was a marked difference between the European indices and the US, with the FTSE rising very modestly, about 25 points, but the DAX up 190 odd points in the afterglow of the deal with Greece, or the negotiations seem to be progressing okay. So that's up about 1.75%. But the Dow and the S&P were a lot weaker. The Dow off 316 points on the week, which is just shy of 2%, and the Standard & Poor's 500 off 27 points, also at 1.25%. In foreign exchange markets, the euro, as I say, relatively stable last week, just down 20 pips on the week, but sterling was a lot weaker versus the dollar cable, falling 125 points, or about 0.8%. Recent data suggests we have some way to go before rates rise in the UK, assuming they rise in the US. Super Thursday's data was surprising on the minutes front. There were 3 bits of data that came out on last Thursday, not just the interest rate decision, but the Bank of England quarterly inflation report, and the minutes from said meeting. Many economists had expected at least 2 or maybe 3 members to vote for an immediate rate rise. In the end, it turned out just 1 member voted for a rate rise, and as a result, sterling fell quite sharply on the news as traders unwound their bets on a spring rate rise. Oil continues to fall sharply as further supply looks set to flood an already oversupplied marketplace. Chinese data continues to deteriorate, as I said. The world's largest economy continues to exert pressure on the resource sector, pushing Brent down last week, $3.25, which is what, 6.25%. WTI in the States also fell $3, about 6.4%. So a considerably weak showing on commodities, and there doesn't seem to be any let up in that extended bear move. Let's have a look at the data and events this week. It's compared to the deluge of the previous week, we have little news this week. Probably the highlights of the week will be the retail sales data on Thursday at 1:30, where strong retail sales will be needed to validate the Fed's September rate rise. So Fed watchers will be on hand to pick through the detail. The core retail sales is the number that we look at, which excludes the volatile components. Plus 0.5% is the number we're looking at, and I think if we do get that, it'll increase the probability of a rate hike. Bloomberg suggests that 58% now expect a rate rise in September, so that's something we've got to look forward to in September. Other bits of data out this week, we have the German ZEW sentiment indicator. Things continue to improve post-Greece. 31.1 is the number we're looking for there. Other bits of news out this week, we got a raft of prelim GDP readings on Friday, starting at 7 o'clock with the German number. We're looking for an increase there to plus 0.5% as the economy improves from the first quarter. We end the week with producer price index for the US. No signs of inflation whatsoever there, plus 0.11%. The strong dollar, whilst hampering exports or certainly overseas earnings for US companies, it has the effect of depressing the producer prices in the United States. And we finish on the week with the prelim reading of the University of Michigan Consumer Sentiment. The consumer sentiment, very important as a leading indicator, 93.5 market expectations. All things remain rosy. That's it. Thanks very much for listening, and catch you this time next week. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.